Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, if you like futures because of the tight spreads and clear setups, go check out Blue Guardian Futures. They let you start trading futures with up to $450k in funding. The best part, you keep 100% of your first 15k in profits, then 90% after that. No activation fees, weekly payouts, and they're sponsoring Chris Eubank Jr. and Birmingham City FC. Go take a look at blueguardianfutures.com or click the link in the description.
Hey, what's going on, guys? It's Brinks Trades coming to you live with another week of breakdowns. Hope everybody's having a great day. And hope everybody's having a great weekend. Had a good trading week this past week. We got about 10 people on the call. Love to see it. If you guys are coming on for the first time, shout out where you're from, where you at, where you're tuning in from. Yeah, and let me know how your trading week was. Again, if you guys don't know who I am, I know I say this every week, but my name is Blake. I am the resident indices analyst for the Trading Nut podcast. So every week I come on here and break down all of the futures market stuff. So we got the big indices, right? The main three, and then obviously the other ones as well too. So we are going to touch on all those things. If a little bit about me, I've been trading for a decade now. And yeah, I've been in and out the markets. And so I really come back on here to really give back and, provide some validity to this industry, right? So there's a lot of people running around saying that they make a lot of money. There's a lot of scams. There's a lot of people trying to sell the course, etc., right? And so what I want to do is just kind of prove that, this is something that can actually, make money, generate money, and basically, come on here and, not only do that, but show you guys that, I have a skill set that I've honed over the past decade. So, yeah, so hopefully that kind of makes a lot of sense, and we're gonna go ahead and get into it. See where we're calling in from. Greg, Nashville, Tennessee. Shout out to Greg. Looks like he a Kappa too. That's what's up, man. The Noob's in the building. Tony, what's going on, man? What's going on? Joe from Nigeria had a bad trading week. Joe, what happened? What happened last week, man? If you don't mind sharing. We're gonna have some people hop on. I'm sorry, we're gonna have more people hop on, and I just want to make sure I drop the link to this chat or this call in my mentorship group or my Discord channel. So bear with me 1 second. Just want to say that we are live now. If there's anybody else watching, don't be shy. Just go ahead and type in where you're from. It helps the algorithm. It helps me. And if you're watching this on my channel or the Trading Nut channel, just take a second, like the video, right? It's gonna help, boost the algorithm up. So please, 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 if you're watching this, please like it. Let's go ahead and go live now, so that we're good there. So let's go ahead and get into these charts. Log out of my trading accounts, make sure we're good there. I need y'all to see my numbers and take them. Let's go ahead and share my screen. I think you all should be able to see my screen. TradingView.com. Let's get over to these markets. I think I'm still logged out. Cool, we're good. All right, let's go ahead and get into it. So you guys know, first and foremost, I always start off with dollar, right? The reason for that is what? The reason for me starting off with dollar is because dollar gives us an idea of where we think the market's going to go. So if we think that the market is bearish on dollar, right, then it lets us know what the other currencies should be doing, especially the majors that have a relationship with dollar, but it also should let us know what the indices are going to do too, right? Because they also have an inverse relationship. Well, let me go back. Some of the futures, depending on what currency pair you're trading, they're going to have an inverse or a positively correlated relationship, meaning they're going to trade the same direction they're not, right? But usually the indices have an inverse relationship. So if one's going up, one's going down. So it kind of helps us build the bias for the week, right? So let me go ahead and share the actual the actual chart that you want to see. So I'm not talking while you guys are hitting the comment section. I'm talking about you didn't show the right screen. So let me know. Let me see. You guys should be able to see my screen. Cool. All right, so going back to this comment section. So we said, okay, man, I round tripped a chunk of my profit, noticed the overtraded too, and failed to execute winners and losers. Lost about 1K USD for someone who's not up right now. Weak mess with my psych. That's something that happens a lot with traders, right? So one thing that you can do, obviously, you want to keep working on your psychology, right? You want to keep journaling, right? You want to make sure that let me scroll over here. You want to make sure that your psychology is in a good spot. You want to make sure that um, you know you're journaling your trades. You know, one thing I tell my students all the time, right, is like, hey, like not only do you need to like record the result of the trade, but you need to record your thought process too, right? Because a lot of times people don't understand that when we're about to crash out in trading, there's signs. So just like the market has signs, it's going to go up, it's going to go down. We also have signs, right? As a person, you know, and you're going to probably do the same things over and over again, or you have trigger moments that happen. And so probably what happened with you, right, is you overtraded. You probably were up, maybe you were up in a trade and then it went against you, or you started out flat and it went against you, right? And then when that happened, you probably, felt like you needed to get your money back. You probably had a loss that was a little bit bigger than you felt comfortable with. You tried to double down and get it back, and then you kind of got yourself into a hole. And so every single time when you're trading, there are these signs that you have that are going to show you that you're about to do something crazy, right? And crazy could be over leveraging on the initial trade. Crazy could be revenge trading, trying to get it back, right? And the problem is that a lot of people don't pay attention to those signs, but the same things probably happen over and over again. And I'll let you know, for me, what happens is, and I tell my students this all this time, is that I either lose more money in a day than I want to, right? And that's probably through over leveraging or over trading or seeing an opportunity and expecting that the trade is 100% going to go my way, or I have a series of losses that kind of add up to one big loss, right? It could be me hopping back in the markets, on a loss, right? Next thing you know, I'm down, I don't know, a bigger number than I want to see, and then I get that urge. It's just something in me just snaps, and it's like, okay, make it back, make it back, make it back. And the problem with that is that my body is telling me signs the whole time, right? Like I have a sign each single time that I know that the further I go down this path, the more likely that this is going to probably result in me crashing out or doing something stupid or losing more money that's not um, going to help. And so one thing you can do with that situation is you obviously journal, right? So you want to every time you take a trade, you want to obviously note the results, the win and the loss. And a lot of times people only think that they're doing good when they win a trade, right? So right now I have a student right now that sends me his trades, and he's like, yo, I won. But I'm like, okay, that's cool, you won, but the result of winning is not what we should want to be looking at. We want to make sure that we're following the process, right? So how are you feeling before the trade? What was the setup? How are you feeling when you execute? How are you feeling when you're in drawdown? How are you feeling if you win or lose? Like those are all the things. It's just a process over and over again. You want to follow that process over and over again. And a lot of people just look at that end result and they're like, I lost, I won. And so for you, you might have, look at the potential end result. Like I might make a lot of money or I might lose a lot of money, right? On this trade, whatever the result is, you're looking at it as a good trade or a bad trade. But really, if you're following your process over and over again, then you're going to come up with those same things. So make sure that you know exactly what is going on in every phase of your trading. Followed what you said. Joe Sunny said, I follow what you said. Okay, so I think you said follow what I said in terms of the like what I'm saying right now or last week's results. We'll talk about them in a second if that's what you're talking about, though. Oh, okay, I got you. Okay, you said you're following. Got you. We're really profound. But yeah, so just make sure. I would say like a good place to start is just having a journal. And I know like a lot of times, like men, like we don't like to journal. Like we don't like to get our emotions out there. We just kind of like hold everything in and say shit's gonna be okay. It's okay, whatever. But you want to journal. You want to take note of how you're feeling before the trade, how you're feeling after the trade, what's going through when you made the decision to do those things. Like overtrade or whatever, what are you feeling in that moment, right? And how does that kind of influence you to do the next thing? And the whole point is, once you hit that, I call it like the Hulk moment, right? Where you just kind of freak out and you turn into the Hulk, right? And you mentally you start like just pushing buttons, right? You see red, right? You can't stop it. Once you hit that level of trading, you can't stop it. Like you will crash out. You will either win, make your money back, uh, win that trade, or you will blow your account, right? And so the whole point of trading, especially from a psychology standpoint, is to prevent you from getting to that moment where you will do something stupid, right? And stupid is going to be different for everybody. Stupid for me could be losing 3 grand in a trade. Stupid for you, somebody else could be like losing $100, right? Or uh, getting to the point, not even, and I wouldn't even put money behind it, but getting to the point where you lose or you do something that's against your rules. I think is this stupid, right? Like so, but you can't control it once you get there. You just start crashing out when you hit those buttons. So I would say look at your whole process, and it might happen again. I'm not even going to be honest with you. It might happen again. It might happen a couple more times, but at least hopefully you're learning what triggers you, so we can put stuff. So you can put systems in place to not trigger you, right? And that's the first thing. The second thing is if you can't control yourself in those moments of trading, there's a really cool trick that you can do. And I know a lot of people on this call probably could benefit from this too. But if you go to Trade if you're trading with futures, right, you can put locks on your accounts that will lock you out of your account um, and stop you from trading. You know, if you lose $200 in a day, right, you can lock yourself out for the day or the week, right? Or if you lose this much dollars in a week from where you start the week at, it will lock you out of your account. You won't be able to go back in. And so, for me, something that's helped my trading a lot is I put a daily loss limit on my trades, right? And so the same daily loss limit that you might have on a futures account, the same thing, but it's adjusted for what I want to see. So now I know I have, let's say I got $1,000 for today to deal with. You know, my account's a little bit bigger, right? So like $1,000 to deal with today. That's my amount of money that I get to play with. If I blow this $1,000, right, then I know that it's not going to kill the rest of my account. I'm not going to walk away like, shoot, I did it again, whatever, right? And in those moments that you can't control your psychology. And you'll notice that a lot of hedge funds and a lot of institutions do that same thing for their traders. Those traders on Wall Street are not better than us. They might be a little bit more self-aware, right? And they have systems in place to stop them from blowing the company's money. So you got to put those same systems in place because there's going to be days where you win a lot and there's going to be days where you lose a lot. And you might be on a winning streak. And the whole point of trading is just to get through the losing streak to get to the winning streaks. That's all it is. Just like sports, you know, it's a game of runs. All right, so cool. Hopefully that was my little like soap on the box moment for this morning. But let's go ahead and get into trades. Let's go ahead and look at things. All right. So we got dollar index. You know, if you can see this screen and and it's clear, like obviously that you can see the dollar index on my chart, you know, XDX1, put a 1 in the chat. I need to see a 1 in the chat. I don't see any ones, so I guess you guys can't see my chart. Let me see. What's going on? All right, if you guys can see my screen, put a 1 in the chat. I need to see some ones so I can move forward. There's some R&B music playing in the background. I'm a huge R&B guy, so no matter what. If you don't know anything about Music Soul Child, y'all need to go listen to that. It's good stuff. All right, so can see 1. Okay, cool. All right, so let's go ahead and get into it. All right, so the first and foremost thing, again, I look at dollar index every week, and I do this. If you go back on every single call, all these calls, none of these calls are deleted. So everything is on YouTube. It lives on YouTube. You can see my call from September 2023. You can see my call from June of 2024. All that stuff lives on here because I want people to see the proof, right? If I'm right or wrong, you know, obviously, you know, a lot of these social media traders, you just see flash. You don't see any results. You just see numbers on a screenshot. You don't know if they're real or not. You don't know whatever. Sometimes they're verified because they're withdrawals from companies, but for the most part, you don't really know, right? And so I leave everything up because I want people to see. and judge me based on my record, right? And so there's a couple things here that I was talking about earlier. So um, again, I look at dollar index to see if I can get a directional bias for everything on the week because cash is still kingdom. Everything is still somewhat related to the dollar. And I don't know if it'll be like that forever, but there's a relationship in place with the dollar and a lot of the currency pairs, a lot of the futures pairs. So when we look at the dollar index, again, I'm trying to get a directional bias that I can take and use as a starting point for every other currency pair. So that's the first thing. So when we look at dollar, we can see last week we wanted to see something like this. And I said, hey, best case scenario, I wanted to see the market maybe run up, take out last week's high, maybe even trade back into this level here and then continue to go lower. And so what we got last week was actually a couple of things that I want to note. So the week started out here. We took sell side liquidity right there, traded back up, and we're really playing off this gap. And the one thing that kind of scared me a little bit is we swept this low with this huge wick and then engulfed to go higher. I don't like to see that. Obviously, the idea is not invalidated just yet because we haven't really broken any structure. Everything's kind of consolidated. But that's not a great sign. But still, same idea. I want to see if we could take out this high and then potentially continue to go lower. So I'm still looking here. I'm still looking for some type of bearish movement. If we go down to the 4-hour time frame, you can see we did sweep these highs or these lows right here, these relative equal lows, and trade back in that gap. So we could run these highs and go lower. So what I potentially want to see for this week is I'm still sticking to my bearish bias. There hasn't really been a full break in structure. There's been some consolidation. So I'm going to be looking at this level here. I want to see what the market does here. Why? Because we have some relative equal highs right here. So I want to see if we can run this high. Take out this high, and then I'll start to look to go short. Again, this is sitting in a huge fair value gap right there. The market is really having a hard time really taking out this low. So I want to see if we can, again, get some buy side, grab some buy side in an attempt to continue to go down. So that's what I ideally want to see, best case scenario. We could just see the market run this high too, right there. But ideally, I'm looking at both those levels. So, but I want to see the market continue to go lower, and that's kind of what my idea is kind of based on and focused on. Again, it's just the idea here that when you look at this level, what's the most likely thing to happen here? Do you think we're going to continue to go based on this huge bearish candle right here? Is it more likely that we continue to go lower, or is it more likely that we continue to run higher? And so that's kind of what I'm looking at. Again, this could consolidate. It could run up and take out last week's high, which is this level right here. You know, so I'm looking at somewhere in this range for the market to continue to do something like that. So still short. That means I'm still long on our currencies. But let me go back to the comment section and see if we got anything. And as we get questions, if you have questions, again, take advantage. Throw the questions in the box. If you guys do not have a personal trader or a personal mentor, right, and somebody that you can ask questions, take advantage of me now. Like, throw questions in the box. I don't care if they're just general trading questions. Take advantage of this hour. I come on here every week, and I wish that people would ask me more questions because when I was trading back in 2015 and I was struggling and I was blowing accounts and I was like yelling at the screen every day and I was banging my head against the wall because I wanted to be a better trader. Like, I wish I could just pick somebody's head for like an hour. And so if somebody came on free on YouTube like this every single week just to talk about things, bro, my life would be changed. So just when you get a chance, if you have a question, throw it in the box. I will not hesitate to answer it. So let me go to Euro. So Euro is in a interesting place. This is the futures version of Euro. Again, it's the same thing if you're trading Euro USD. I know there's more international people on here, so I'm going to look at Euro USD. So there's a lot going on here. So I'm going to backtrack things, and I'm going to look at things about where I saw them heading last week. So last week I said, this was this week. Okay, cool. Last week I saw this and I was like, okay, cool. We most likely are going to continue to go higher, right? Based on where we're at here. And I was outlining stuff to my chat all week, and I'll clean this up a little bit so everybody can kind of see. But I want everybody to remember this fair value gap because it's going to disappear very quickly. So this fair value gap from this low to this high. So again, the market traded into this imbalance here, this old fair value gap. And I said, once we saw this huge wick, I was like, all right, cool. We're going to run higher with this target in mind. I wanted to see the market take out this high. So what do we get so far this week? And I was pretty much outlining this day by day in my chat with my Discord. Well, we ran up and took out the old high here. And I'm going to get rid of this. This is a really cool indicator if you guys trade with smart money concepts, ICC concepts. This is kind of help you a lot and kind of let you see what the higher time frame candle looks like. And I use that a lot when I trade. It's called PO3 1D. You should use that. But so when I came into the market, I wanted to see this fair value gap. I'm sorry, hold. So this daily fair value gap here, that's at this level from 1.257 all the way down to like 1.1 something. So it's a big fair value gap to daily level, right? So I wanted to see the market respect that level, and obviously with this huge wick, go higher, right? And so we came out of the gate on Monday like this. If we go back down to the daily time frame, came up out of the gate with a huge swing. And I ended up getting in a swing trade. I'm actually still in the swing trade. So I was in through all these levels here, and I'm still kind of currently holding. So what I saw, what I thought was really interesting was that the market again started out here, came up out of the gate, right? And then went higher. Again, good power 3 for the week. And actually we opened up pretty much not too far from where we closed. It was a very consolidated week. So I'm still looking at a couple levels this week. I'm still bullish because there's no break in structure here on the daily. There was a 4-hour day break of structure right here, right at 1.04, 1.1405, but really this kind of looks like consolidation to me. I mean, it could be technically a break in structure. We did sweep these highs, right? We did kind of break these level here. So we could see the market run lower, and I'm not 100% opposed to that idea. But I do see the opportunity for the market to continue to go higher. I can see how this could be consolidation as well. So I kind of see both things. But when you jump to the daily time frame, you can easily see that the market here is running still bullish. It hasn't broken structure yet. Now it could change, right? This could change and go lower and go lower. It looks like it's on the verge of it, but right as of now, I'm still going to stick with my bullish bias. And so I want to see the market run higher. So there's a couple levels here that I'm going to be looking at the market to sweep and potentially go higher. The first one is this level at 1.3572. That's the first level. The second level is going to be last week's or Friday's low at 1.3730. So I want to sweep these levels. Boom. And then start things to go higher, right? I'm going to be looking at last week's high as the target here. And then the last month's high, which is this high here, which was our original target on the daily time frame. So if I go here, you guys can see that was my original target up here that I wanted to see the market hit. And I thought I was looking at the market because I was in swings, and I'm still in a swing trade here on Euro, that I thought the market was going to, once it was up here, I thought this was going to be an easy shot for us to go take out that high. And then we just kind of traded back into the range and then went away from it. So again, I do see a world where we could potentially just break structure and keep going lower, right? But I want to say, based on what we're seeing here and the idea that we're still very much bullish, there's some weekly concern here because this is weekly levels. There's a lot of wicks. So I'm still going to be watching that. I do expect to somewhat still see a run higher regardless. So maybe I'll end up exiting the positions if I don't like what I see, but I'm still here and I still think that the market's going to continue to run higher. And this is kind of a fake out. So I could be wrong, but we'll see. Let's look at the other charts and see if they kind of line up with what we're saying. And that, again, being able to look at multiple charts still kind of helps your analysis, and it helps you kind of form a better picture of what you think is going to happen overall with the market. So I'm going to jump to GBP, but before I go to there, again, if you guys, have any questions, drop them in the box. I'm going to keep saying that over and over again. If you haven't liked the video yet, please like the video because it helps the algorithm and it shows that, people actually care about what I'm saying. So let's go ahead and look at GBP really quickly, and then we'll take a break and then go to indices. So GBP is in the same situation. It actually looks a little bit better. Actually looks a little bit better than Euro. And that could be a good thing or a bad thing. So what I'm seeing here is I saw Euro pretty much GBP run out and take out this old high, which is a great sign. It's a really good sign that the market took it out, especially after wicking off of it like this for so long. It was like 1, 2, 3, 4 weeks before it ran up and took it out. This is a good sign. And honestly, I probably would have taken the trade on Euro if I was thinking, or I'm sorry, I would have taken the trade on GBP if I was thinking instead of Euro, because this one looks a little bit better, but I think Euro was just the one that I saw first. So again, this is what I'm looking at here. So we have these old highs here. So I'm looking at a few levels that we could run to for targets. Obviously, last week's high is a great draw on liquidity, right? We know big banks and big institutions are going to put their liquidity over daily and weekly highs. So last week's high is always a good target, that wick right there. Again, if I go to the weekly time frame, you can see that. And then the next level is the old weekly high. So that sits at 1.364. I'm actually going to have a third level on here that I'm going to be really watching this week too. I don't know how expansive we're going to get this week. We could see something crazy, but this third level here. So again, last week's high, and I think if we take this high, we're probably going to run to 1.363. I do like the fact that we stopped before taking that high out. It just kind of gives us a set of relative highs. So anybody who's short from here, or even shorting from here, because there's some people that always want to short the top of the trend, they're going to have their liquidity sitting right there, right? So it's giving you guys a little bit of a mindset, kind of like the way that I see the markets here. So you're going to be short from there. So if we do run up and take that, this level here over last week's high at 1.362, then my guess is we would run here. So I'm kind of looking at this as one big zone. And then really, I want to see if we can get up to 1.3757. So let's get to that. That's the goal for this week. Again, things I am watching though is we did technically break structure on the 4-hour time frame on GBP USD. So I will be watching to see if that's the case. Again, I still do like this level more. I like this chart more than Euro just because it's a little more clear. So if I had to pick one, and if I wasn't already in swings on one, I would probably trade the other. But I see that as something that interests me a lot and kind of looks like it's still being maintained. So again, I would say as long as we're probably staying above the consequent encroachment level of this fair value gap at 1.3519, in the midpoint of that is 1.34923, then I would probably want to say we're going to continue to go higher. So something like that, So that's what I'm looking at on GBP. Sorry, I'm getting like crazy calls in this while I'm doing this. So let's look at these comments. Can you explain how fair values work and how you use it in your analysis? Okay, I will explain this. But I will say the disclaimer here before I get to this question. I'm gonna do a little plug. I'm gonna do a little plug for my community. So if you guys are struggling as a trader, right? I do a couple of things. And I have a free Discord for you guys can join where I do updated analysis. Again, stuff changes throughout the week, right? And so basically, what the markets look like now on Sunday or Saturday now that the markets are closed may not be what the markets look like going into next week, right? It's because we know anything could change. We got a president that loves to tweet, right? We got, a lot of stuff going on like geopolitically right now, right? So anything could really change between now and next week, and start of the markets opening up, and kind of how that Monday really plays out really solidifies things for me. So I do updated analysis. Long story short, go to this website right here, and it's called talentedtentrading.com. That's my community. And join at least the free Discord. It gives you access to the same Discord that my mentorship, a big Discord where it's divided into two parts, a free and a mentorship group. And for the free community there, again, I'm constantly posting in the chat there at least a few times a week, about just general trading advice. If there's anything that changes with the markets, the way that I see them from a projection standpoint. And then there's also a mentorship side where I actually teach my strategy, and I actually work hand in hand with like the daily setups, like in terms of like what exactly I'm looking for, where I'm entering, and working with directly one-on-one with my students there. And then there's also a Sunday call that I do, like kind of like office hours, where I basically help everybody with their problems trading. So if this is your first time really like checking me out, check that out so you can stay locked in with me and kind of get updated analysis. So with that being said, Greg, I'm going to get to your question right now. I'm going to answer that. So without giving away everything, because we will be here for hours, right? Trying to explain everything and how this lines up with my strategy, but I can't explain what a fair value gap is. This is a pretty common trading thing that you'll see. And so this is, let's just draw a box here, right? So fair value gap is just essentially, a fair value gap is essentially an area, the easiest way to explain it without going into too much lingo and kind of like theory here is it's basically an area of supply and demand, right? And so there's two levels here, right? And it's the easiest way I explain it. Again, if you're in the course, you're like, no, it's not supply and demand, whatever. It's cool. Like this is the easiest way to explain it to somebody who's never heard it before and doesn't have 3 hours to sit in my class, right? So, you're going to see me do a lot of analysis like this, where I'm going to draw fair value gaps at certain levels, right? On the higher time frames and lower time frames. These areas act like a somewhat of an area of supply and demand, where the market can basically it's attracted to these areas, just like the market's attracted to certain support levels and resistance levels. Like it's the same idea. So I throw these on my chart to give me a better understanding of areas where I think the market could go, areas that it should respect, and in certain cases, areas that I don't want to see it respect, right? And so, for instance, I have one drawn here, and there's usually going to be bullish ones and bearish ones. I usually color coordinate them to basically understand. So for instance, this one right here is called a BISI, right? This is I'm going to save you the terminology, it's an area of basically support, right? And so I want to see the market trade into this level and respect it and go higher, right? And so it's based on a lot of theory. There's a lot of different ideas and theories. One is, it's a little bit of Wyckoff theory. It's a little bit of smart money theory, right? It's a little bit of a few different things kind of tied into things. But basically the idea here that the market is looking for an area of fair value, right? A good place that the market has not really had buyers and sellers trade into. And so when the market forms, a bullish fair value gap like this, and you can measure these by looking at a 3-candle play from the low to the high, right? From this low to this high. And usually you'll see a gap here. So if I replay this, I'm just gonna go back here. I want you to look at these 3 candles from this low to this high right there. And so if you look at these 3 candles, you see a big white space or big kind of area in here where the market hasn't traded into. And because of that, I want to see the market come back to this area. And this is basically what I call an area of fair value, right? Meaning that it's an area where there's buyers have kind of come into this area, but we want to see sellers come into this area really to really mitigate things. And a lot of this has to do with like order theory and a lot of other stuff here that I definitely do not have time to go into. But just the idea that when you see these zones in the chart, depending on your bias, you want to see these respect or disrespect them, right? And so how I use them is, in this case, we're bullish. I want to see the market respect this level. So I basically want a lower high to form somewhere in this range, right? Because I'm bullish. And this gives me a zone to work with that I want to see the price turn around in, or respect or support. And so basically at a high level, it's an area of support and resistance, right? And so when you talk about there's 3 levels that I look at on a fair value gap: the high end, the midpoint, and the low end. The midpoint is a level that I'll refer to a lot as consequent encroachment, right? You'll hear me to use this term a lot on these calls, consequent encroachment. And so with consequent encroachment, it's just the middle 50% level, and that's that dotted line there, right? And so usually if I'm bullish, I'll say something like, I want to see the market retest this gap, but in an ideal world, it will stay above the 50% level, right? So that's a little bit of sauce. It's a little bit about fair value gaps. Obviously, it's the opposite for a bearish example, right? So you might see something like this 3 candle play right here, from that low to that high, right? And it's a civvy or a bearish fair value gap. Again, there's a lot of terminology. And again, in a bullish example, I'll say, like, I want to see the market respect this level, right? And what do we have here? Right, I just did not pull this example out of my ass. Like, it's literally like, just, it's random. I guess I did pull it out on, whatever. Anyway, it's a bearish example, right? So it came up, respected that 50% level, and then decided it was going to go down. There's a lot of reasons why the market respects these levels or disrespects certain levels. Again, I can't get into all the theory right now, but Wyckoff theory, mean retracement theory. There's a lot of stuff and reasons as to why the market does this stuff. But hopefully that kind of gives you an idea of what a fair value gap is, why it's important, it's powerful, things like that. So that's what I'm basically saying. Let's see. This bro can't explain the simple fair value gap, bro. That's crazy, but I can't make money from it though. When someone keeps on saying basically, that's not sure. All right, so basically, I say basically a lot, but I guess I can make money from it, so that's all that matters. Anyway, King Cartel Blues. All right, appreciate it, man. Like I said, hop in that community, man, that I jumped in, and I can definitely explain that a little bit more in there, and you'll see me use it a lot. But that's a great question, because again, like, I use these a lot when it comes to my trading, and it's one of many things that I use. So hopefully that makes a little bit of sense. So it's a little sauce I'll give away for free. But going back to the GBP USD, again, I want to see the market really continue to respect this imbalance right here. Boom. Right there. So again, I want to see the market continue to respect this zone. I will be looking at the midpoint. I will be looking at the low end, and I want to see this level go higher to take to at least this high of last week. But then also I'll be looking at the high of the 1.364. Let's see. Boom. So let's get that question off there. All right, now let's look at the indices, man. This is what I definitely want to talk about. I know this is why a lot of people are on here. They want to trade indices, et cetera, et cetera. And then I'll round everything out by talking about gold again, because it's one that everybody wants to talk about. So let's look at NASDAQ. So NASDAQ, I'm actually really happy about this one, because this one played out to a T from last week. So our targets here, if you guys go back and watch last week's video, I wanted to see this as our target, right? And I said a couple of things. I said, best case scenario, we run out and take out sell side here, and then continue to run out and take out the old high, right? We didn't quite get as low as we wanted to see on this wick, but if you look here, you can see we did respect, obviously, consequent encroachment of this wick, trading into this order block here, and then, turned around and went off for the week. And that's exactly what happens. Again, sometimes when you're trading, you might not always see the best optimal pullback level, but again, your attention should really be focused on the target and how we get there over time. So, so Yo, that was weird, guys. I don't know what's going on with my computer. Give me 1 second to reboot. Um, that was weird. It's basically the StreamYard went out. So let me drop a one in the box if you guys can still hear me. And I'm rebooting my computer right now. So again, I don't know if it's the StreamYard. It's not. It's working on my phone, but it was like crashed on my computer, which is crazy. But if you guys can hear me, at least drop a one in the screen and see what's going on. I'm gonna turn my camera on. But while we're waiting on my computer to boot back up, if you guys have any questions at all, drop them in the box. Again, I love the fair value gap question. That was awesome. Again, it's they're questions that they definitely I wish I had somebody that I could have asked, like when I was trying to trade a $300 Forex account back in 2015. I wish there was people that I could have asked these questions to. So if you have general trading questions, it could be like what you're struggling with. I'm always down to help those out as well. And I'm hopping back into my my account right now, so you should see me switch over in a second. So let me do this here. Oh, that was 20. All right. Do this. Okay, cool. So present again. Drop a one in the chat if you guys can see me and if you guys can hear my screen. See me and see my screen, not hear my screen. But while you're doing that, go ahead and see. I'm gonna go ahead and talk about NASDAQ. So hopefully you guys can see this. But basically, again, coming into last week, we wanted to see this market take out the target here, right? That was our goal for the high. We ended up hitting that weekend off at Thursday. Really, we're tearing away from it on Friday and trading back up again. So ideally, what I want to see here again is the market to continue to run right through this, right? This is something I'm watching very carefully this week. And to my students, I told everybody the last couple of months, I've really been focusing on currencies because just the market isn't here. And so I know a lot of people get caught up in like, I'm a Forex trader, I'm a futures trader, but really the thing you need to be focused on is being a trader. Like that's the most important thing here is is not to be I trade forex, or I trade futures, or I trade gold, I trade silver. Like people try to make it like a club, and it's like I just want money. Like that's all I care about is I just want to make money doing this, and I want to be able to read these analysis and do the right plays. So it doesn't really matter what I trade at all. Like I bounce back and forth between a lot of things depending on market conditions, and all markets have cycles, right? So there's going to be times where markets are consolidating, and you're going to have to kind of jump back and forth to the market that has a lot of volatility. And if you have a good skill set and you can read the markets right, that's the only thing that matters. Hugo, what's going on, sir? This is one of the mentorship students. Hugo, man, this is if you go anywhere in the Discord, you'll see his profit shots just all over the place, man, because he's killing it. So anyway, so let me go back to this. Boom. So what do I want to see this week on dollar? I'm sorry, on NASDAQ. This is MNQ. I usually trade the minis just because it gives me a better risk to reward than the full contract ones. But we're bullish here. We've been wicking off of this level. I really want to see the market really trade above this level. I don't want to sell off of sell side liquidity. I'm sorry. I don't want to sell off of I don't want to buy off of buy side liquidity. So I need the market to give me some level that the market that it's respecting to let me know that we're going to potentially go higher. So in this case, I'm really looking at a couple levels. I really want to see the market invert this fair value gap here. And I want to see this disrespect this, right? So I want to see us get above this high, maybe even this high, for almost like a break and retest, right? And then take things higher. So that's what I'm going to be looking at for the market to continue to run higher. Yeah, once it does that, then I'll be looking to buy. If it doesn't, if it continues to reject, then I'm just going to set it out until it gives us something to really run with or work with. So, but I definitely see us running this last week's high, rejecting from there, and then I can see a world where it could also go down. So again, I'd like to stay out of trades and stay out of the market until I get a very clear understanding of bullishness or bearishness. And so this is what I'm going to be probably looking for to happen. If I don't see this in particular, like us get out of this gap, take out these highs, and then start to go higher, that's what I look to start to buy. So if I don't see this exact thing playing out, this is just too close to an area. Man, you might call it an area of resistance. You might call it a buy side liquidity, whatever, right? Like it's too high or too close to this area to try and buy off of at this point. So I need to see some broken structure, some rejections, or some disrespecting of levels. So all right, so what do we got here? Let's international people, right? Same thing. This one I like a little bit better actually, because it actually closed above. I think this one, let me go back to NASDAQ. Yeah, technically it closed above last week's high, that target level that we called out. Or did it? Thursday, May 20th. Technically didn't, but it's a lot more bullish than it did close above this old swing high, which is the area that I was looking at the most initially when I made the projection. So I do like the fact that it did that. I'm looking really, and it actually took out these. That's crazy. See, once you learn these concepts, man, your life will change. I swear. And you can employ them, man, your life will definitely change. So I had the level called out that I wanted to see the market potentially run here because I saw this trend line liquidity building up right there. Again, it's another concept that my students won't understand 100%. But anyway, I want to see the market run up to this level here. We ended up tapping that level and trading back into the range. I'm still bullish. I'm really looking at this level as a long-term draw on liquidity. And this level is going to be at 6,067 there. And that's really where my eye is going to be drawn to for us to continue to run to. So that's what I'm looking at right there is how do we get to that level? And so what am I looking at the market could potentially do? Well, I could see a world where first and foremost, I want the market to stay over the swing high. That's the first level that I'll be looking at. to see, if we're bullish or bearish. Again, this is very bullish. Like, it's extremely bullish. So it's gonna make a lot of sense for us to want to continue to go higher. So that's the first thing, right? So the second thing is how we treat this daily order block here. So that's what I'll be looking at, is this level, the zone right here. Technically, this is like a propulsion block, but I want to see the market respect this order block here and go higher. So worst case scenario, I would be okay with seeing something like this, right? If we're extremely bullish, we might not even get this low, but this is like the best case scenario where I want to see the market trade to. So maybe even this like low end fair value gap, you could see the market really run into, grab whatever liquidity it needs to take. It would have took out, the low of Asia or London, maybe even of Friday. On the 15-minute time frame. Yes, maybe it takes out like Friday's low and then starts to run up higher. This is a definite, I don't know if we're going to get here all in 1 week. We might not, but this is definitely where my eyes drawn to. So let me go to YM. Actually, let me go back to NASDAQ because I don't think I did give targets. Okay, cool. And let me go to Dow Jones. Let me actually head back to the comment section again to see if there's any questions that you guys have. If you're still with me, drop a 2 in the box. A 2 this time, not a 1. Let's do a 2 if you're still with me here. So YM is doing the same thing. Like, it's respecting its level, like this fair value gap level right there. It's wicking off consequent encouragement. A lot of wicks here. I am looking at this level as a buy side level right there. And I want to see the market run into that. So that's what I'm going to be looking at for the market to trade into for this week. So what points are those? Those are going to be 42,844 is where we're currently sitting. I wanted to trade above this level, 43,012. This is just not a good area to try and buy into. It's wicking off of this fair value gap here. So I need to see a little bit more like reasons for wanting to get into this trade. So we just ran this old high too. So I need to see this market trade above this fair value gap right here would be a great level of respect. If not, then I'm going to be looking to short, right? I'm going to be looking to take out something out of the zone, but I think this is probably like a very clear short if it continues to reject off of this. But as of right now, I got to stick with the bullish bias. So I would love to see bull opportunities above this fair value gap here. So I'll be watching that. And if we never get that, then I'll look to go the other way. But really right now, this is kind of like appointment decision. Whenever you hit these zones or these target levels that I call out, you kind of have to sit on your hands a little bit to see if the market reacts and responds or if it wants to keep running through. And that's the fun part in trading is like, you never really know where the levels that you're calling out are like kind of like the ultimate draw on liquidity, meaning that this is the target area that's going to have before it reverses, or is it going to rip right through, right? And so that's the hard part there. So let me go back to the question, the sheet here, and then I'm going to wrap things up by doing gold. So if you're still with me, I appreciate it. So let's knock out gold, and then we'll get to any questions. So gold kind of looks like it could be bearish. This also means that maybe some of those other pairs that I called out, like euro and stuff, might be bearish as well. So let's go to the weekly time frame here. So you can see that we've had like 3 wicks. We tried to break through this area once, twice, Then the third time was last week, and it really just failed to do so. So this could be a bearish move. It's still technically, and if I get rid of some of this stuff on here, we can see that the market really tapped off a consequent encroachment. So that's a good sign for bullishness still. It did technically invert this old fair value gap right there. So that's not a good sign, but it did respect this order block here and the consequent encroachment level of that. So what am I looking to see happens here? Well, I need to see some type of, I need to see an old swing high taken out in the 4 hour. I need to see inverted fair value gaps. So like there's this zone right here. It's like a consecutive set of like 2 fair value gaps. I want to see that inverted. I want to see the market start making higher highs again. And something like this, when you see stuff like this, this kind of lets me know that the market could be building up sell side liquidity or buy side liquidity to take out. So maybe we could see something like this where the market does something like this. So ideally, I want to see the market really respect this. You can see when this market was really just dragging to make lower lows that it's going to be a buildup of sell side liquidity sitting up above those highs. So I could see us going a little bit lower, maybe even to this low here at 3,321. But I do want to start to see this turn around if we are going to maintain bullishness here. So that's what I'm looking at long term. But we'll see what happens. I'm not too confident in this one, and it almost makes me doubt the other ones that I've called out on Euro. So, but I think these still look pretty good to go higher. 6BH, yeah, definitely even Euro, like or even pound here too. So, looking at USD/JPY, USD/CHF still looks bearish. That's a good sign. So. And then if I look at USD/JPY, this one looks very bullish though. Go to the weekly. So I think, yeah, it kind of looks like it's finding area of support. We'll see. We'll see what happens. So, all right. So basically, I'm bearish on dollar. I'm bullish on currencies that end in USD. So Euro USD, GBP USD. I'm bullish on the indices. So hopefully we get a play out, something that we can frame out for a good trade. So again, I got a couple minutes, so I'm going to stay on here. And if you guys have any questions, go ahead and drop them in. We got about 50 people on the call right now. So if you guys do find some value in that or have questions, feel free to jump in. And then also, man, I'm going to tease 2 things. Yeah, so someone just dropped in the box. If I could get my clicker back. Someone said you trade NAS. So NASDAQ, if you trade NAS100, right, it is the same thing as NQ. It's the same thing. So MNQ and NAS100 are the same thing. This is why I have them organized like this. So MNQ is just the micro NQ contracts, or you could trade regular NQ, which is the standard contracts. I trade micro because they're smaller and I can have bigger, I can better risk management. So NQ and NS are the same thing. If you look, they're the same thing. So basically, again, I'm bullish on NASDAQ. I said that during the call. So what I want to see is the market continue to run higher. We're almost at the point where we're making all-time highs. Again, I know like a week or 2 ago or a month or 2 ago, everybody was talking about this whole like recession thing kicking in. You got to just know better. You got to know better. Anytime the market shorts like this, it's really just trying to run liquidity to go higher, right? And that's all it was. This was all just a big game. The tariff announcements, all that stuff is just a big game. So Gotta know who's in charge and how they're making money. So, but anyway, Nasdaq NQ I'm bullish on. So this is what I'll be looking for this week. So again, I'll stay on for any other questions. If you guys have any other questions, you know the drill, you know the deal. I know there's a little lag on the recording time from when I'm saying stuff and when it comes out. So you said, do I trade prop? I don't know if you trade prop. I can't tell you if you trade prop. And then while we're still here, man, I'm gonna drop a link for the Talented 10th. This is again my community. Again, if you've seen this, you know, let me talk about it. But inside of this is basically my free Discord community where you can be a part of, you know, my free Discord or be part of the paid mentorship as well. So I basically offer two things, which is a free Discord service, which is acts as an updated analysis for this one. And then the paid mentorship, which acts as, you know, obviously my direct like relationship where I'm teaching you guys my strategy head to toe, and then or A to Z, and then, you know, giving the community support to really, you know, obviously be a good trader. And I tell everybody in my Discord, like, I want them to be good traders. I don't really want y'all stuck on me in my head for life because I'm not trying to do this years from now. So someone said that I trade prop. I do trade prop. I have accounts with Top Step, Apex, and my funded futures are the ones that I trade. But right now, I've really been focusing on my live account. I just get more satisfaction out of my live account trading. And if you add up, I think the drawdown limit on my 150K accounts with Top Step, I have 5 of them. So 5 times 4,500 is like what, 13,000, right? In drawdown, it's like I can put together a 13K account, right? Like it's not that much money. And I'd rather, you know, have the satisfaction of being able to trade. And if you think about how much money you make, and I had this, like, I have 20 Apex accounts, like I have 20 full Apex accounts funded, and I think about how much money it took me to get those accounts and how much dollars that I had to make, virtual dollars I had to make before I could pass all those accounts. And for the drawdown, it was like $50,000 with the drawdown limits, right? Like that's how much money you get if you add up like 20 accounts times 2,500 for the 50K. So you have 50K in drawdown limits. And I'm like, dang, I could just save, like, over the course of some years, like I could save a 50K and just trade that live, right? Or even with Top Step, right? Like that 13,000 is basically with all the drawdown they give you. They give you 13,000 in virtual drawdowns and say grow that. So all the money that you see people having with those crazy withdrawals, it's at the most Top Step gives you to build all that is 13,000. And you see people trying to like people taking basically $13,000 of drawdown into hundreds of thousands of dollars or whatever. And I'm like, that's cool, but you could also put together a 10K account. You could see the average person could save up 10K in a year's time at the minimum, right? And do something like that. It might take you a little bit longer, but you know, the satisfaction of being able to like pull your money out after trading them is crazy. It's a lot better to me. I still advocate, I think prop firms are the easiest way to make a lot of money, right? Like over time, right? Just through scale, because you can have 20 Apex accounts, you can have 5 Top Step, you can have a bunch of my funded future joints, you can have a lot of accounts, right? And I think if you're trying to build a lot of wealth, that's probably the best option over time. And it's cheaper too. But if you're just trying to make like a couple $1,000s with trading, if you're trying to make a few $100s with trading, right? Like it's probably more advantageous for you to have your own personal account than it is to trade prop. Um, it all depends on what your goals are, right? Like if you want to make millions, you probably need props. If you want to make a few $100s each week, and everybody's goals are different because everybody wants to be the retired trader, but like realistically, uh, some people aren't meant to be that. Some people are better trading, keeping a job and using trading money as they're spending money. Whatever your goals are, right? If you want to make a few hundred or you make a few $100,000 a month, like whatever they are, they're possible in this industry. You just gotta know what works best for you. And I'm a combination of both. So I have prop accounts and I have um, personal accounts. I think the most money I've really seen people, like real traders, not social media traders, I've seen more people make more money with prop than I have with their own personal accounts in terms of like a lot of money. But again, it doesn't take much to take a few $1,000s in a futures account and then grow that over time, right? And I think for a lot of people, the satisfaction of that is a lot better for them because you got to think about how much money, like to even get a 50K account, you got to think about how much money you got to make. You're basically you're basically saying like with a 50K account, you gotta you gotta make you got to give 100% return, or actually over 100% return, probably like 120% return, just to get access to 2 grand. And that works. It works. Like, don't get me wrong. Like, just for one account, not worth it. For 30 or 40 accounts, probably worth it. Right. And so you got to think about how much money you're making virtually to get to that 30 accounts. So each account that I got, like my Apex accounts, I had to make $3,000 per account to get to those accounts. So like I had to make $150,000 in virtual capital to get access to 50K, right? Like that's a lot. That's a lot of money, right? To make. So 150K for Apex. Then the other one, the top step ones are 9,000, I think. Each you got to pass 9,000 times 5 is 45,000, and then the next one is what my funded futures. I'm not fully funded with my funded futures. But that's another, 9K or uh it's a lot of money, man. I guess what I'm trying to say is it's a lot of money virtually that you have to make before you even get access to the capital. And once it's there, I think the problem with that psychology wise is a lot of traders see getting the account as the prize. And so they're like running through those things and they're just trying to get a payout. They're trying to get a payout. They're not really trying to build a business. And trading is essentially a business. They're trying to one shot and gamble and go all in on a setup instead of trying to win over time. And most people will tell you getting 100% return with proper risk management is a very hard thing to do. And so it almost encourages you to spend a lot of money trying to, uh, trying to, you know, um, like gamble accounts. You basically have to over leverage. There's no way you will pass a funded challenge account without over leveraging at some point in time. But the problem is that it's hard to turn that off. Right, it's very hard to turn that off once you get the real account, and so you're doing a lot of times people do the same things they do in those funded stages that they do to get profitable. And if you don't have good like risk management strategy already in place and a good mental strategy to protect yourself from doing something dumb risk management wise, that's why they make so much money because they're dangling 2 grand over your head. Instead of you taking $2,000 of your own money and saying, I'm going to slowly grow this, put a lot of parameters on my account. So if I do something stupid, it locks me out. Like I was mentioned with our guy earlier at the beginning of the call, like it would probably be better for a lot more people if they just traded their own personal money. But then at the same time, you also have to have like you have to go through the fuck it phase where you basically are like you blow accounts and you don't understand what risk management is and you think that like you could put 10 standards down on a contract and just run away and win every time. So you have to go through a lot of growth. I think while you're growing, those virtual accounts are really good. They do teach you structure. They do teach you that. At some point though, you do want to get to your own accounts. Because when I think about how much money virtually I made to get fully funded with a lot of these firms, it's crazy, man. Like, I mean, 200K. I have not made 200K from prop firms. I'll say that. Like, I have not made 200,000 from prop firms, but I've averaged probably past at least 200 or 300,000 in prop firms to get to the accounts that I have. Um, I've made 6 figures from personal capital, right? I've done that. Um, you know, so it's like and everybody's different, right? And I'm not shitting on prop firms. I'm not shitting on anything. I think prop firms are the easiest way to get into the game, and they do teach you structure, but it's so easy to one shot those things. It's so easy to over leverage that you look up and you probably spent 3 or 4 grand on prop accounts. So I think having good structure, good mentorship, it's going to be key for whatever you do, but you got to have that stuff in place, regardless of what you do. But you also have to know that maybe you have to risk a little bit more and be a lot more aggressive on those prop firm challenges than you should be or would be in your personal account. Oh, dang. Hold on. So I'm going, it's a lag on the call. So I'm looking to see, like, Dre Fax is asking a lot of questions. I'm trying to make sure what questions are the right ones I'm answering. So I would say Top Step. If you're going with a prop firm right now, Top Step is probably the safest one. They've been around the longest. They're the kind of like the OGs in the prop firm space on the future side. If you trade Forex, I don't really have a great recommendation for you. I probably would say like FTMO if you live outside of the United States. If you live in the US, then maybe E8 would probably be the second one. I got funded with them recently. The experience was decently cool. So I would say that's probably the one that you want to check out. Apex is okay. They're not. I mean, there's a lot. They've been having a lot of accounts, and the problem with this, I was going to make 700 a day for 5 days. So the problem is that you can only really take what the market gives you. I hate when people say I'm going to make this much a day, right? Because you can't really. It sets a bad expectation in your head, because what happens if you make 699, right, and then the market goes against you or it stops you out? You're going to really try and fight for that money, and that's how you get money back. So really, it's kind of hard. Like, you can't really just say like I'm going to make 700 a day for 5 days. Like, it's like you it might play out like that, but a lot of times it won't. So they having an expectation like that is kind of unrealistic. To make a set amount every single time you trade. Only trade NASDAQ and ES. Yeah, I mean that's good. That's for sure. Like, I know a lot of people, futures is the wave right now. So like a lot of people are just trading futures. I trade everything, but I also have experience in a lot of things. Like, I've been doing this since 2015. So a lot of traders I see on TikTok and Instagram right now, like they probably were like in elementary when I first started doing this. So it's like, and that's how I know that a lot of them don't have great risk managers. There's a lot of scams you see online, or a lot of people coming out like, you know, trying to say that they've made this much money, or they're an expert trader, and they haven't been trading since before 2020. So it's like, you probably aren't, to be honest with you. I'm gonna be honest with you. So it takes a while to get this. So don't fall for the scams you see online. That's the biggest thing, because a lot of people are just lying. Like, I could really sit here right now and say I've made $10 million from trading, right? Show off my Audi car keys and be like, yo, like, get like me, buy my course, right? And like, that would be a lie, right? And so I think it's just easier to be transparent with people. It saves you in the long run, but then also, um, it's so easy to lie on the internet that, like, you know, especially when you start to actually like look up to the person that you're watching, right? Once you get there, it's like it's easy just to lie to people, which is sad, right? So like, just make sure that when you're going through and you're looking at these people online, you keep a realistic expectation. So once again, I'm gonna drop a link to my community. Again, it's a free Discord. It's not gonna charge you anything, right? If you choose the free option, right, it won't charge you anything. So get in there. And just be part of the community, see what's going on. There's a lot of cool people in there. There's a lot of people that are learning to trade just as well. um exactly. Dre Fax said facts. I bought a lot of courses through the years, right? Like, so there's a lot. I mean, and I've probably spent at least 3 or 4 grand, probably more than that. It might be closer to 10 in the last 10 years. Probably like somewhere like between like 4 and 5 grand, I'd say, like, on education. Um, and I've took courses from a lot of people, all the people you can think of online, right? And there's a lot more that you don't see online because they're part of the older generation of traders that aren't social media traders. But there's a lot of courses that I've taken, and I've taken a lot of pieces from a lot of different people to build my strategy that work for me in the way that I see things. Um, but you learn a lot. You learn a lot from different people, and I'm not going to say it's bad, because the way I see it is if I learn at least one new piece of information that can help me see something a little bit differently or give me a better edge, then it was worth it. But at the same time, you are seeing a lot of people that don't really have trading experience. They're just repackaging the same support and resistance like stuff you can see online, right? And if if they don't have a good trading record themselves, if they can't prove to you that they built an account. Like I used to have a Telegram account where I showed everybody that it's still open technically. The Telegram link is still technically open, but I had a Telegram account where I took 40 or 10,000 to 40 something grand in 2 months. And it was just slow grind. And I wasn't even really being aggressive with it. It was a futures account where I was trading NQ, and just with one strategy once a week, I was able to build that account from 10 to 40K. Right. And so that is something that, I showed every step each week. I updated everybody. I even showed the back end TradeZilla stuff too. So like you have to be able to do stuff like that to show people, because there's so many scams. There's so many people driving a car. And I don't think a lot of people realize that in Miami, you can rent a supercar for like a couple $100s. And I've literally seen people rent supercars for a week, or not even a week, a day. And they will take 30 shirts with them, and they'll film 30 days worth of content to make it look like they own the car. Right. And it's the craziest thing, and they will try to sell a course off of that, and it's a lot, man. It's a lot of scammy stuff. So just whoever you learn from, whoever you pay for your money at, see a track record, and see results from that person, right? Like I'm not even advocating you learn from me. I would love it, right? But I think the community that I'm building is been one that's a lot of people can attest to. But like whoever you learn from, just make sure they got a track record. Make sure they can actually prove week in and week out. And that's one of the reasons that I do this call. One, to give back, but then also to prove to people that like if I say I could trade, I could trade. And if you go back and watch, at least over the past year, a lot of these calls, I'm calling things out with like about an 80% call out rate. The trades are definitely in the 60 something percent, but the actual like projections are in the 80s. So like you want to make sure that you have somebody like that you can look up to. So but yeah, so that's all the questions I got, or all the time I got. Again, if you guys are interested in following me on social media, I'm a real person. I talk to people. I respond to messages. Find me on social media. You can find me at brinkstrades.com. If you follow me on my YouTube, the same call is broadcast every week to my simultaneously to my YouTube channel as well. So you'll see a lot of videos for the past year, live videos of me just doing these. They all live on my channel. Again, I'm building a track record for people, because I would love to work for a hedge fund one day. Like that's kind of like one of my goals, or one of my dreams, is to like invest and do this on a big scale. So that's what I want to do. So I want to keep that track record. So follow me there on social media, Brinks Trades. And then again, the Talented 10th community is my community. That is where I teach people how to really see the markets the way that I see it, right? And really, I can't promise you're going to become the best trader in the world, right? Because that's up to you. And I can't really promise that you'll make money legally. It's just, I'm not I like to keep myself in the good side of all the people that I need to. But I can tell you're going to learn how to read price, and you can be accurate in reading price. Whether you choose to put money on that, that's up to you. But, so if you have any questions, y'all can find me there. So peace. Hopefully y'all have a good one. And hopefully y'all enjoyed the call. All right, y'all. Peace.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, if you like futures because of the tight spreads and clear setups, go check out Blue Guardian Futures. They let you start trading futures with up to $450k in funding. The best part, you keep 100% of your first 15k in profits, then 90% after that. No activation fees, weekly payouts, and they're sponsoring Chris Eubank Jr. and Birmingham City FC. Go take a look at blueguardianfutures.com or click the link in the description.